morning traders, Richard here doing a quick Ichimoku cloud chart market review of the S&P500 Index together with a point and figure chart review of the index. We'll start with the weekly Ichimoku cloud. Very strong rally. This rally started back here in November. Very strong move to the upside. We can now see we're very close to the top end of the front end of the cloud chart resistance zone, so it'll be interesting to see if the index can break through that resistance zone. Now the downside risk is the first consolidation back to the turning line of the cloud there, and the next one would be the standard line of the cloud, which coincides well with the front end cloud chart support. So these are the downside risk targets on the weekly Ichimoku cloud. Basically a consolidation, Fibonacci retracement back down to these key support zones as well as this previous high. So any kind of weakness in the market, we could see some form of a consolidation back down to these levels. Now interestingly enough, this is we completed an upward continuation pattern of this move, pull back to that side, to the upside. So it's very close to that upward continuation pattern. And it's a little bit further than that, so we had a bit of a strong move there. A bit concerned about that spinning top there on the market there, so it'll be interesting to see if we can get a continuation of that move. Now this is the second leg up after this bull market started back here in October 2020. This comes after this huge correction and then a rebound from the 2020 old highs there became new support zones. So we kind of a good couple of months into this bull market, and we've had our first leg up consolidation, second leg up, and now it is fighting that resistance zone at the front end of the cloud. Turning to the daily, let's take a look at the daily Ichimoku. Yeah, we can see nice strong move. Cloud chart crossed here, a few tested of the cloud for support, but every time we get a nice cloud chart rebound, another cloud chart cross there. Now also on this one we can see where the projected resistance zone is from an Ichimoku cloud. We can see there right there at 5166 roughly, so we're struggling to get past that. So we could see a consolidation back to the standard line of the cloud as well as the bottom end of this cloud. Yeah, so that's the key support zone over the next couple of weeks in April, May and June. So do expect some form of a consolidation back after this very strong move. So if you look at the upward continuation pattern from this move, the March low here to that high is almost the same as the current move. The current move might be a little bit further than this move, so we had a nice upward continuation pattern both on the daily and the weekly. So the market's ripe for a bit of a consolidation and pullback to digest some of these gains, but so far so good. Price action above the cloud on the daily, so that's bullish long term. Price actions above the cloud on the weekly, with a kind of a consolidation back to key support zones over the next couple of months if we don't get that breakout past these zones. Now turning to the S&P from a point and figure chart perspective, yeah, we can see beautiful upward continuation pattern, strong rally back here in this one turned around. Yeah, when is this date? Yeah, at the bottom end of 21st of Feb, very strong move there, turn around there, March. Very strong move there, pull back, consolidate, retested these old support levels, resistance levels for support. Also it made a strong reversal at this point and figure chart trend line, then had a very strong move, went a bit further than what we were projecting on a Fibonacci level. That was 150% move, 50% move, and then 168 Fibonacci level, slightly above that. So there's downside risk in terms of a consolidation, because this is a very strong single point rally. It's a very strong rally to the upside, and can expect some form of a consolidation. At 23.6 consolidation will bring you back down to 4950, and a 38% retracement will bring you back down to the previous high zone. Now with this reversal, met numerous upside point of figure chart targets: 44, 45, 47, 49, 4850, 48, that one there. And now we also met these old highs there. Now we also met 5050, 5100, 5050 there. Now we're a little bit far away from the next three targets, 54, 54 there, and 6100. So these come from this thrust there. We look at the significant moves to project the upside point of figure chart target. So 54, about 4.87% away from that one, and then a much higher one, which is probably a year-end target, so to speak. because we do need to see a similar consolidation we've had here. We can expect that to take place over here. So we are a little bit extended from a big picture perspective, close to resistance levels on the Ichimoku cloud, and now do need to see some form of a consolidation of this move. So downside risk targets to this Fibonacci level of 4950 and 4800, roughly around about there, for the next couple of weeks. But so far so good. Very strong rally. Watch out for a point and figure chart reversal to the downside that will start signal the end of the current trend. But so far so good. Very strong rally, and it's now completed more than an upward continuation pattern from a Fibonacci perspective. Now looking at the log scale point and figure chart, you can see it a little bit more evident there. Very strong move. We don't see this kind of move very often to the upside, so you can see, look back, there's very few of these, so there is a consolidation risk. Took out all the upside targets, 4902, 5000, 5101, 5152, took out those targets. Now the next targets is 5635, 5692, and 5806, so a little bit far away from those. And there's a risk that this market might not be able to continue this upward thrust from a point and figure chart perspective, and do need to see some form of a consolidation. So once again, watch out for a point and figure chart reversal to the downside. That'll give us an idea as to when this current trend is complete. But so far so good. Very strong move, still a very strong uptrend on a point and figure chart basis, but watch out for any kind of reversal to the downside when we start seeing these type O's to signal a consolidation of this move. But you can see when this rally started here in October 2022, strong move, consolidating, strong move, and now we do need to see some form of consolidation. So the downside risk to the old high there are 4,854, and also by that time it'll be kind of at a trend line zone as well. So keep that in mind. But so far so good. Strong rally, hit the targets to the upside. Now just watch out for any kind of downside reversal to signal the end of the current rally. Until next time, happy point and figure chart. Bye for now.